I would now like to introduce today's presenters. Michael Jansen, Chief Research Guru, guides the practice's research agenda and architecture by leveraging his extensive experience to identify and unlock emerging trends, all with the purpose of helping client organizations maximize their global services efforts. Eric Simonson, Managing Partner, Research Division, ensures that the firm's portfolio of research capabilities comprehensively addresses the entire global service space across geographies, services, and sourcing models. I would now like to turn things over to Eric. Eric?
Great, thank you. Next slide, please. Just quickly to highlight a little bit about Everest Group for those who maybe aren't as familiar with us. We're basically a firm that focuses solely around services, whether that be IT, business process, or engineering. And that's what we eat, sleep, and breathe. And our clients tell us that part of why they enjoy working with us is that we help accelerate how they make decisions, and we do that by increasing their level of conviction. And what we bring to that is basically a lot of insights, granularity, rule structure, and then also the expertise to interpret that. What we'll be sharing with you today is our view of what are likely to be the themes of the coming year. And I'll turn it over to Michael Jansen to tell us a little bit about the backing of where the insights came from for the study.
All right, thanks, Eric. So this is one of my favorite studies of the year that we do. It's because it's really kind of getting a window into the future of what clients are thinking. We did the same study last year, and so you actually get to see some of we'll have a couple slides where we show trend changes from this year to last year to this year, actually. We did something a little different this year, and we're surveying our enterprise clients, and we actually focused in on a number of different stakeholders. So what we have is a common set of questions, and then we had some questions that are very specific to sourcing and procurement, shared services, IT, and engineering services. So there'll be a couple questions where we actually delve into a specific kind of departmental view, if you will. The other thing is we will be bringing in a couple slides from other studies we've done through the year to bring a little bit more context to the problem or challenge that was presented in the key issue study. So with that, let's start with some numbers here. And I wanted to provide a little context. We got 3 slides here where we're going to kind of show you some metrics here and talk about kind of what's the stage setting for 2020. And if you're watching your CNBC or sometimes your CNN or your Bloomberg terminals, you're going to be seeing some fantastic numbers. If you're want to be optimistic, there's lots of good reasons to be optimistic. We got the stock markets, at all-time highs. Ignore Monday and Tuesday of this week. But we're just off highs. We got unemployment at generational lows. We've got interest rates near all-time lows. If we've even got a weird situation where we actually have negative interest rates. But from a business situation and an overall economic standpoint, things are looking pretty good. Yes, there are some rough spots out there, but overall, you would think the backdrop from a financial context and some other macro statistics looks pretty good. But and I said this with a big but, there are a lot of things out there that are creating uncertainty and creating a lot of noise for you. I think I'm going to stay away from the politics here, but I think we can all safely acknowledge the fact that policy by Twitter has been a jolting experience over the last 3 years. You wake up in the morning and you're not sure exactly what the news feed's what direction it's going to take, and it certainly can have some impact on specific parts of the economy or sometimes even specific companies. The other part if there want to be a little bit negative from an economic standpoint is the weakening manufacturing growth. And what you see on there is the global PMI numbers, and you can definitely see a trend downward and those actually goes into 2019. We've also got the uncertainty around the U.S. and some of the European elections that everybody's well aware of. We've also got uncertainty around geopolitical issues such as Brexit. We just had our NATO summit yesterday and the day before. The global trade numbers are down, and you can't go more than a few hours before the U.S. trying to trade comes up, both at a macro level, how the country's going to work, but how's it going to impact my business?
Michael, one to me the most interesting examples of this dilemma you're laying out, that things look good, but yet somehow they don't feel like they should be good. Earlier this week, there was this announcement of the co-founders of Google stepping aside, and saw an article speculating that there are actually quite a few more CEOs thinking about doing the same thing, simply because it's so good right now, and they don't necessarily want to be around to have to deal with what they fear will be a challenging few years in front of us.
I think we should create a CEO index, departure index. I don't know. All right. The other thing so the things we just showed you on the previous slide, those are things largely that are not in control by you or your business. But on the other hand, there are a number of things that, that, like there always has been, that are rapidly confronting us as businesses, and we need to either figure out what the impact to us means, what we're going to do about it, and what are the potential options we have going forward here. And so I've kind of put them in three groups here. The changing environmentals can't necessarily change the climate, but we can certainly recognize that climate is changing. We can debate the cause, but the climate is changing. We certainly can't debate the population demographics changes as some of the major world economies see the populations age. That's certainly having a major impact in terms of financial, as well as what people are looking to buy and what services they need to consume. And then there's the ever-changing business models. And last year we featured a number of statistics around we didn't call it the retailer apocalypse, we called it the Amazon effect. And in those charts we showcased how Amazon's been out there for way more than a decade, but it wasn't until the last 2 years at the time, 2017, 2018, and now 2019, where we've started to see major impact from the Amazon effect on the retailer storefront. And now it's starting to not just be kind of a, hey, Amazon's, big and, they're creating a new retailer experience. But the impact is now, but businesses are actually shutting down in record numbers, or storefronts are shutting down in record numbers.
Yep. The one to me that kind of is a broad thing that we see in organizations, and we'll come to this in a different way in a few slides, is around the customer experience. And basically, everywhere we look, people need to make their businesses more simple and faster for their customers. People just don't expect to wait for information. And the challenges for the legacy companies, they have so many entanglements that it's hard to figure out exactly how to go after that without upsetting the apple cart. Whereas some of the challengers or subgroups can potentially carve off a small segment to go after and then grow from that. But basically, the big hope on the simple and fast tends to be technology themes, and we'll see that both here on the next thing you'll talk about, Michael, plus throughout the results of the study.
Yeah, and then there's a whole layer of technologies, and I could have made that a very long list here, but whether you're thinking electric vehicles, what the impact on that is to our infrastructure, and many more things that are upstream and downstream from the building of electrical vehicles, AI and automation on the services side. Certainly, we've heard the threat of the robots are coming. I don't particularly like that analogy, but I do think there's a lot of things that will help build efficiencies and a lot of effectiveness, or a lot of qualitative and quantitative benefits into the services side of the equation. And medicine, certainly there are some miracle drugs, and I can speak from personal experience there, that there's some things that are now life-saving out there that weren't there just a couple of years ago. So again, the things on this page are things that you as a business are going to have to think about in 2020, 2021, and going forward here. So let's move from the kind of the setup here and the context. Let's move to the numbers. And so what I wanted to do is just talk about, how do people feel about their 2019 performance? And so, as we went into the year, people had a set of expectations. How did they feel about where they stood in November and at the end of this year? How do they feel? And so you can see that, for the most part, people are actually feeling, slightly better than expected. I mean, at the end of the day, it was a good year. Yes, there were 20% of our participants in the study that felt that it was a tough year, and there were some people that felt, that had a fantastic year. But most people were kind of about as expected or slightly better than expected. Now, if we ask the same kind of question, and these are, and I would refer to these as sentiment questions on the next page, what you're going to see is we took the same question and we compared the answers from how do they feel about the upcoming year? So what do they feel like last year about 2019, and what do they feel about this year, or what do they feel about 2020 right now? And you have to see that there is a marked level of well, less optimism out there. So it's not terrible. People are still, overall, they're still optimistic about next year, but they're a little less optimistic than they were heading into the beginning of 2019. So again, it kind of fits with the theme of uncertainty, a little less optimism out there. Now, that's great. These are kind of sentiment numbers. Now I want to move into some hard numbers with regards to the actual revenues and headcounts. And again, here we compared what we found last year head to head with what we found this year. And what you'll see here, and probably the easiest way to just go far to the right here. And you know, if you look at 2019 revenues and headcounts, up 7.6 and up 5.1. Again, you know, people are expecting some inflation there, and they're expecting some productivity improvements. But as you look at the numbers this year, they're down a point or two, down 5.4 and 3.9 respectively. So again, goes with the previous sentiment slide. When you ask about their revenues and their expectations in terms of hiring, again, a little bit down. And so, you know, I think, you know, the best way to describe it is we're not sure what's going to, you know, that uncertainty can be in there. People are just trying to start hedging their bets. They're not going into hibernation. They're not going into, hey, the world is falling apart, but they're not sure that they should be quite as optimistic in the upcoming year.
Great. And when we actually ask people, you know, what are they then focused on as a result, and compare that to last year, the number one and number two things stay the same. Adapting their business model, which goes back to some of the earlier commentary, plus price and cost pressures. What we've seen is that concern about regulations has gone up in some key markets, probably related to some of the geopolitical uncertainty that we were talking about earlier. We also see a lot of organizations saying that a slowdown in customer decision-making process is impacting them. That was out of the top 5 last year. And then we've also seen talent actually a slip from number 3 to number 5, although that actually varies a little bit by segment that Michael mentioned earlier. We'll come back to this in a few slides to talk about where that's not as pronounced. Go to slide 12 now. I want to set the stage for what we'll go through here in the next bit. We're going to share 3 different sections. So the first section around convictions will be the longest, and these will be a set of things that, based off of the survey and some of our other work, are things that we strongly believe and we think are key underlying assumptions for how people need to be moving forward. We also will go through 3 provocations, and these are areas where we maybe don't have quite the same level of proof as we do in the convictions, but they're things where we think people need to push their thinking and maybe challenge themselves to think differently. And then finally, we'll end with a few quick thoughts on some controversies, some of the things that we believe are important questions that there's not good answers for yet, and things we expect that we'll be spending time exploring in 2020. Before we go into this, I just want to mention for everyone that as we go through this, we'll be trying to take questions and respond to those. We'll also have some Q&A at the end. If you want to enter those, feel free to put those in the dialog box on the right-hand side of the webinar, and we'll get to those as we can throughout the webinar, and then also in the last 5 or 10 minutes of the session. All right, our first conviction. Our first is simply that customer experience is not something that's going to go away. This is not a luxury that everyone is enjoying while times are good. It, as a focus, is here to stay, even in a downturn. So why do we believe that? On the left-hand side are when we ask people what happens with their business priorities if the economy continues to strengthen. And on the right-hand side, we ask them in the survey, what happens if it weakens? What will be your top priorities? Interestingly, in both scenarios, the top one was to continue to invest in technologies and capabilities that improve customer experience. People see this as critical to their survival. It's critical in two ways from my perspective. First, simply customers' expectations have changed. We're not willing to wait as long. Back to my earlier point about people wanting things to be simple and fast. It's an on-demand world, and that doesn't change. In fact, may even heighten in a downturn as people look to optimize how they spend their money. The second reason why it's important is competitive threat. If you're not going to change and become better, by golly, your competitors are, either your existing ones or new ones you aren't even anticipating. So, regardless of scenario, the investment in customer experience is important. Also want to point out, if you look at the kind of the clusters of things on each side, on the left-hand side, the second and third, we're investing in technology to streamline process, and then analytics. Notice both of those are kind of technology-centric thoughts for investment, that technology is going to help us become even better. When you go to the right-hand side, we have focus on the operating cost reduction and operational efficiencies and productivity. Although those may also include technology, they're less about new things, and they're more about an operational view of how do I get done what I'm doing already in a more productive way, more efficiently. Michael, you want to talk a little bit more about that on slide 15?
So Eric, one of the things we're trying to do is ask the questions and similar questions around the topics and get two different perspectives on it. So the question that you just addressed was really around their top investments for the year going into 2020. As we asked the question about what are they doing about the business model, so specifically addressing the business model question, we knew that was number one last year, so we wanted to figure out what part of the business model are they planning to change. And no surprise there, it comes back to customer experience. So the customer experience is that number one thing, as you indicated, and I do believe it's in terms of what they need to change in the business model for the things you said. Number two, operational efficiency. I think goes hand in hand. The assumption is that it's still faster, cheaper, and new products and services was number three. So asking the question two different ways, we get similar type answers around the customer experience. And so again, I think a lot of this, you go back to the Amazon effect. We saw the momentum build through, for the last couple of decades, but then all of a sudden it's, people's expectations have changed, and now they want their package. They want to be able to go online in any format, any device, any channel, and be able to get that service or product in a quick, easy, manner. And so, even the groceries now, your expectation is that you hit a button and it shows up at your front door now. So, okay, so let's move on to the second conviction. And so, as we look at the conviction here, it's really talking about the technology advances that are the key lever to improving the customer experience. So we asked the question around which specific technologies are you investing in? And so probably not a surprise is if you want to improve the customer experience, you need to start with the analytics. Help get an understanding of what your customers are looking to do. What do they want to buy? How do they want to buy it? And that all comes back to data. So again, that last year it was number one, and this year continues to be number one. Those are the way they're looking to make their investments from a technology specific thing. Cloud solutions continues to be at the top of the list. In fact, it's up 2. And then RPA, and I can almost combine, and it's becoming less distinguishable here, but the automation or the advanced automation, those are both in the number 3 and 5 spots. And again, I think that's back to, as we talk about the talent challenges, the speed of delivery, the automation and advanced automation are some of the fastest ways to get an ROI, to get implementation. It doesn't necessarily require you to rethink the entire ecosystem of systems, but rather, sometimes some of these things can help just work with the existing systems and put in. I hate to use macros on steroids, but some of it's macros on steroids, or some of the advanced automation. It really is trying to take it to the next level along with the analytics. I think about our own personal household here, and how Alexa's taken over the household, and she's no longer just sitting in the corner. She's actually front and center, and You know, my wife uses her for building her shopping list. We buy stuff off there, and now she turns off the Christmas lights. So, you know, those things, automation, that's on the customer side of the equation. And then there's all kinds of things on the back office. So, you know, people doing highly manual, repetitive work on the services side, you know, it's no longer there's almost no excuse for it now. You know, you should be looking at some of these technologies that are very user. Also, we got the last one on this row here, the user experience, customer experience. That's something that's still high on the list. One of the things I point down here, and we put a different number of technologies on here. Blockchain and quantum computing didn't make the top of the list. I think those are still, the blockchain is not so much a universal technology. It's more of an ecosystem play than a technology play. And quantum computing, it's on the list, but not a priority for anybody right now. So I think it's still too far down the road. It'll be interesting to see in the next couple of years, does that move the needle on that area. Okay, so now let's move to the next page here. And there's a number of questions we ask that are what I call the pendulum questions. And so we're going to ask a series of questions of which direction are you moving in, and from, you know, kind of things like centralization, decentralization, cost versus value. The first one of those questions we asked was around, are you taking the approach in building relationships, or are you using data or relationships as your primary way of interfacing or building value? And what you see clearly here is there's a bent toward more data driven. It's not so much about intimacy, it's about having the right data. Okay. And so, you know, especially see that on the engineering side. All right, then we ask the question, and thinking about this in the context of the challenges. So I don't think there's any question that people are digitally focused and understand the impact, and have been moving in this direction for quite some time here. But when you ask the questions of what's driving that, what's preventing them from doing that, and still the number one question here is organizational resistance, are the number one impact area, is that the people are still having organizational impact to organizational resistance to making the change. The number two goes back and goes with the theme of analytics, is they don't have enough data or analysis. So that's obviously why they're looking to making analytics as a top investments. Insufficient resources is still a challenge. And then finally is the challenge in integrating and adopting new technologies. So it's not that you know, people aren't, you know, there's a little bit of everything in there if you look at that closely. There's the organizational structure, there's the data, there's the resources, and there's the integration. So you know, if it was easy, people would have done this a long time ago. And I liken this dialogue back to the conversations of, you know, it's easy for a .com company or a new fintech company to come up with a new value proposition and implement that and try to scale that. It's a whole nother experience for you, taking an existing business, one that's got established customers, established processes. It's another thing for them to be able to make those changes. Think about it as they're flying their airplane across the country, and to change out the entire engine and the build and power behind an airplane, you can't do that necessarily flying through the air very easily. You got to do it bits and pieces at a time. So organizations have to deal with that reality.
All right, the third conviction is around there's still going to be a shortage of next generation skills, and it's although it's been talked about, it's still there, and we see this in all the analysis that we do. Just to highlight this a bit, on slide 21, when we look at the specific stakeholder group from the survey of the shared services and GICs, and ask them about their most important talent issues, you know, the first thing that comes to the top is the shortage of the next gen skills. Notice that number 3 is sort of the opposite. They're also often finding a limited supply of the entry level. So it's a twofer. They both can't get the specialist stuff, and even increasingly the entry level is challenging. Next slide, please. We also asked about what they're doing to respond to different talent issues, and you see the left-hand bar of the 5 is the summary across all the different stakeholder groups, and then the 4 to the right are the different ones we mentioned, from procurement to shared service to IT to engineering. The most common thing is indeed training and development. People are mainly focused on how do I you take the resource base that I have and have that help me adapt to new changes. In particular, procurement and IT are more inclined to do this, whereas the shared services and engineering are actually more commonly pursuing the next thing above it, which is building the longer term pipeline. So how do I partner to end up with the flow of capabilities that I need versus converting the ones that I have right now. The other thing we'll point out, we put in kind of an interesting twist, and we were curious to see if it was being considered at all, is actually to what extent are people using automation and AI to help relieve some of the pressure? And the point being, if there's things that need to get done, can you actually put technology to work to help you get those things done? In an aggregate, we found 15%, or roughly, I guess what 1/6 of it of the group was at some level using that to help offset the people challenges through technology. A bit surprisingly, IT was the least likely to do this. Maybe that's because they've already been prone to exploit that lever, and there's not much more they can do. But at least on the surface, it's curious that they were less likely than others.
Yeah, and I think when I hear the automation conversation, there was originally kind of a pitch: the robots are coming and they're going to take over the world, and there's all kinds of conversations around how people are going to lose their jobs. And I still think that, and for certain segments of the services business, that is a true statement. But for the vast majority of the enterprise employee base, I think it's actually going to be something that it's how we're going to get our future productivity. It's how we're going to attract our future talent. Figure out the things that they don't want to do, they don't need to be doing, and automate that. Use tools and technology to improve their overall experience. We talk about the customer experience. Well, it's also your employee experience. Okay, so let's move on to the 4th conviction. And again, this is more pendulum swings. Having been around for 3+ decades in the business world, I always find it curious how things move back and forth along a pendulum, where, hey, we need to be more focused on this, now we need to be more focused on that, ignore that. And it usually, and depending which attribute you're looking at, they tend to move with fairly rhythmic regularity over sometimes 4, 5, 6, 7 years period, sometimes quicker than that depending on the topic you're talking about. But one of the first ones we asked about was, what's the pendulum swing toward cost versus value focused? And you can see here, nobody's in panic mode. Nobody's saying, or there's not too many people in panic mode where they're saying, hey, we need to be focused on the cost. It's all about the takeout. Right now, the momentum is still moved toward the value side of the equation. And so people are looking to say, how can I improve that employee and customer experience, as we've seen consistently with the other slides as well. This is one I always find interesting around the reporting structures. And so the centralization, decentralization, you clearly see a move towards centralization. And I find this interesting. We didn't ask this question last year, so I don't know what the trend here is, but I'll be interested to see how this continues to move over time. But right now, it's definitely moving toward centralization. And so folks are looking to figure out how they can to drive consistency, drive efficiencies across the process. And right now, it is definitely moving in the direction there. The reasons people move back and forth between centralization and decentralization usually is the efficiencies, driving standardization, all that good stuff. And then at the other side of the pendulum swing, it really comes into intimacy and driving business unit behaviors. It's really trying to drive that uniqueness in different divisions within within an organization. And when you're decentralizing, you're looking for that. Hey, we need to move faster. We need to move with more precision to our customers and get a better alignment with them. And so again, not the number one concern right now. Number one concern is that centralization. All right, then the last one we have here in the pendulum swing series is really around intimacy, and really kind of talking about this is an internally focused slide, but really looking at, do you want to be geographically remote from your customers, or do you want to be closer to your internal customers? And this one we saw mixed results. In fact, if you look at overall, the pendulum's kind of right in the middle of the swing. We did see engineering and IT looking to get closer to their customers. And on the other side, we saw procurement, sourcing, and shared services in the organizations looking to continue the trend toward remoteness. Now, part of that may be because of the taking advantage of labor arbitrage, but you couldn't say that same thing for IT. IT's been doing labor arbitrage for quite some time, and the fact that IT and engineering are looking to get closer to their internal customers is something that I find interesting.
Okay. All right, our final conviction is around agile, in particular agile and IT. Basically, it's become clear that it's important, but it's still far from being a capability that's been mastered. And so there's a lot of extra value to unleash here beyond just the token adoption of it that is the most common scenario in the market. What our research shows is that actually over 90% of organizations say that they're using some form of agile. However, when you dig into how many of them believe they're mature within agile and are getting the benefits, it drops to 20%. So that leaves a full 70% of the market that is doing something with it, but not feeling very good about the outcomes thus far, or see that they have a good ways to go yet. So what causes that? Let's look at slide 29. Our perspective is that if you look at the left-hand side, there are a number of things that organizations do that overcomplicate it a bit. Just to highlight a few, it may be how they try to apply agile into a waterfall type scenario, and it's not adequately calibrated. Dropping to kind of the bottom of the list, maybe trying to do things too quickly, and there's just not enough change that's actually happening to get behaviors to change. And then kind of the final thing is just agile washing, that hey, we need to have made the change. Let's declare victory. It's more of a journey of how organizations work and behave. And just because you throw everybody through some training and implement some new tools, et cetera, doesn't necessarily mean you've actually gotten there, although it may have helped check a box on a corporate mandate. The implications of these things lead to some of the challenges on the right-hand side. Comment on a few of these. The first being the kind of the weak business outcomes. In theory, the whole idea is to get things out faster. And if the business, the rest of the organization is not aligned into what's going on, they're not going to get that benefit. They have to change, as well as the what's happening in the IT delivery. It's a two-sided street. Next is the unintended consequence of, hey, we train some people up to be agile. We may hire some people laterally, but then if things haven't really changed, they're actually more valuable and more satisfied by doing something somewhere else. So you end up with attrition. So it's kind of a gut punch of getting kind of halfway there, but not sufficiently there. And then the third is just simply it does require some different types of management, which can increase complexity, and therefore the costs of that go up. And if they're not getting the benefits as well, it becomes frustrating for everyone. That is the end of the 5 convictions that we wanted to share. I'm going to hand it to Michael now. We'll go through the 3 provocations, which are some areas where we again have some points of view that we feel reasonably convinced of, but are more offering them up to challenge people's thinking and see if we can prove these out to the next level more in the future. Michael?
So our first provocation is really acknowledging that there is a dizzying array, as we refer to as new digital technologies here. but suggesting that even the best technology, even the best companies are still not able to take advantage of what's available, and for the other companies, the gap continues to grow. So what we wanted to do is really put this in the context of kind of an overall framework on the next slide. And really what we're going to talk about is our digital capability platform. And for those that have seen it before, I'll go through it pretty quickly. Really at the first layer, we're really talking about the infrastructure layer, called the performance layer, if you will. It's really about driving scalability and performance. The next layer up is really about the automation. It's really driving process efficiency. That's where you see your RPA in there. And the layer above that really gets into your insights layer, driving analytics and decisions. And then above that, you get to the interaction layers. That's where your experience happens. And so you're trying to drive those stakeholder experiences. And then if you look on the right there, we've left in cognitive AI as applying to all of these. And the one thing I will say here is, if you were to pull out any layer or any one specific circle on this chart here, there would be dozens of vendor solutions and service provider solutions that you could apply and mix and match in different layers and circles and combinations of permutations. We spend an amazing amount of time trying to understand what's real and what's not real on this chart. But I put that out there to say, hey, there is things that are coming to us left and right and from north, south, east, and west on this chart. But then if I go look at it from the other side of the equation, and I wanted to pull up a real life enterprise view. So that was a market view on this slide. Let's go to the next slide and pull up an enterprise view. And this is from a study we just completed in the past couple of months here. And we were really looking at the sourcing innovation pinnacle study, where we're looking at procurement. And we specifically were looking for how organizations are innovating in these 7 different categories. And what you'll see here is we asked basic analytics, we asked advanced analytics and automation and digital solutions. And for those, we labeled pinnacle, so roughly the top 15% of the companies that we studied. There's some basic analytics that they're getting accomplished. And the top organizations are doing some things with advanced analytics, but still a lot to be had. Automation and digital solutions, similarly, not so much. But if you look at the other enterprises, the other 85% of the companies that we studied, what becomes evident here is a lack of blue color on this chart. It's just not happening. And so when we presented the results to CPOs, we looked at this and they kind of go, yeah, you're kind of right. We should be doing better. We should need to work hard on this conversation. But of all the solutions that were presented, and there would be, functional and industry-specific solutions to all those circles on the previous page. When you pick down and drill down on one department, there's a lack of execution here. So again, our provocation here says lots of opportunity, and our belief that the gap between the best and the rest continues to grow. Our second provocation is really around how organizations are treating their contingent workforce, and this has got some basis in another study we had done, and I'm going to show you a couple data points from that. But really, the contingent workforce is, after talking to these organizations and looking at the data, you almost got a sense that some organizations really appreciated their contingent workforce and others didn't. And the reason we highlight the contingent workforce is it's an increasingly larger part of the organization. And as talent becomes more precious and it's more difficult to procure, and we get into different generational work habits, the need to be able to deal with workers that are not necessarily labeled as part-time or full-time or temp, but really a whole spectrum of different work models and employment models comes into play. So whether you're talking about crowdsourcing and a whole spectrum of things there. On this chart here, what we've got is, 36% of the enterprises are saying at least 16% of the workforce is labeled as contingent. And I would tell you from looking at the data, for some organizations, it's much more than this, depending on which industry segment and the value propositions and the business models for the organizations you're talking about. It can be higher than 25 and 30%. And if you're looking at specific departments and IT, it can be even higher than that. And so, the question here is, how are we treating these segments of talent here? So on the next question, next page here, You ask the Pinnacle enterprises and the other enterprises how their contingent workforce management strategy aligns with their business and strategic objectives. And for the Pinnacle enterprises, we found pretty good alignment, but for the other enterprises, it wasn't there. Okay, and then if you look at the share of enterprises it's closely aligned with the talent strategy, it's even more stark. You got 80% that feel like they've got their contingent workforce strategy aligned with the talent strategy, and only 19% of the others. And so again, the so what of that conversation that we heard in talking to folks was, sometimes it was, hey, the contingent workforce, that's procurement's problem. We in HR aren't even really concerned about that. They're not real people. They're not really part of how we're going to address talent needs in an organization. It's somebody else's kind of problem or opportunity. And it was kind of really stark. I mean, there was some other organizations where HR was embracing the contingent workforce, but it was almost like in many organizations, it was either an us or a them conversation. And in some organizations, we even heard that there was an us and a them, and there was a mother-in-law involved as well, or father-in-law, if you will, called legal. And so because of the uncertainty of the regulatory and legal statutes that are involved, in many cases, there was almost like, hey, we're going to take a very conservative approach, and because we got to abide by all these things, we're not as concerned about trying to get around those or trying to figure out ways of making this workforce feel welcome in our organization. Okay, and then just again another slice back one slide there. Another slice of the data here. When we ask what are the challenges from an operational standpoint, what are you looking from a management standpoint? Really, the number one comes back to the same thing. With it, depending how no matter which question you ask, it comes back to the data visibility or data lack of data. And so again, this is where this is being addressed by some of the best companies, and they're looking at how do they bring the systems on board. I think in more you see on the right there, it's the fourth element there, but not really that much different from percentage standpoint. Is that clarity on ownership, the alignment of the strategy we saw in the last one. Those are the challenges. The tools are there as well, but really, again, second-class citizen integration of the company culture really becomes there. So what we want to continue to explore as we go forward here is really how do organizations really think about the contingent workforce in the context of procurement and their talent strategy, and then integrating into the overall business strategy.
All right, our third provocation is around innovation, and basically that if enterprises are truly serious about wanting to get innovation from their third-party outsourcing providers, they're going to need to pay for it. It's not free, and it doesn't come baked in. Next slide. When we asked in the study what value props the enterprises are wanting to improve on from the service providers, the very first one is around help drive innovation. Long list of other things there, but innovation comes to the top, and it's one of the classic complaints about the outsourcing model. And it's not this is not really new news, although it is interesting in times of comparative goodness that innovation stays at the top. I think we believe that the reason for this is that people really need to plan if they want to have innovation. It doesn't just kind of happen magically, and it is real effort. One of the first parts of effort is just to be able to focus people and effort to make sure you understand situations, you can calibrate ideas. A clever idea on a whiteboard at the end of the meeting doesn't necessarily drive it forward. It takes extra effort to do that. And then beyond the idea, you got actually into the change, either the piloting to see if it has any legs, or the actual change. And these things just don't happen naturally.
Yeah, and Eric,
the implication here is, I think enterprise, if they really want that from their providers, they need to be putting kind of their money and their time into it as well. And in some ways, holding it out and making it a real focus versus trying to bake it in focuses the mind to make sure that people are committed.
Yeah, and I find this one interesting. When I saw that at the top of the list here for value propositions, I remember the same exact conversation happening going back into the quite frankly, going back more than 2 decades when I was at Gartner and doing best practices groups with some of the largest outsourcing deals on the table. And those groups would get together, and their innovation, comes up as a top topic. And how do I get more innovation on my provider? And I think the reality is everybody gets focused in on doing the deal, and they get focused on the level of service and the level of price, and hey, here's what we want. And then everybody's happy when the cost gets reduced or the service gets improved, and that's great for a year or two. But then the world changes, and all of a sudden the contracts are not nimble enough, or there's no economics, as you suggested, to make the change happen. And so, I don't know whether to declare victory or be, cry in the milk here. Is why is that still number one? It's not like we're back to the future consistently on this one. So I think it comes back to what you said here, is it's not free, and you've got to have very good diligence around making it happen. Okay, so that's our provocations, the controversies we want to consider in 2020, and these are things we're considering, things we got to think about as we go forward here. And we don't, there's no straight answer on this one. And the first one we put on here is, it goes back almost to the trade wars and the Twitters and stuff like that. Well, as we go more nationalistic, will that have an impact on our ability to deliver services? And that you can suggest happens in 2 different ways. It could be in outsourcing services, or it could even happen in some of the the shared services or insourcing situations. It's certainly being felt on the manufacturing side, where people are looking at their supply chains and having to rethink those as tariffs become more of an issue, or other trade barriers come into play. Will that same thing happen in services side? And I think there is a possibility of that happening. I don't want to say it's a probability, but certainly there are certain things that are in play there that can make that happen. The second one there is cost cutting different in a digital era recession. I think that is, we do know if the pendulum swings more from the value focus to the cost focus, we do get some kind of financial shock to the system. If we do go into recession, there will be I can almost predict with 100% certainty, if we do have one of those, companies will resort back to what they know how to do the best in those kind of situations, which is preserve, self-preservation, cost cutting, and
but I think it is a bit of a controversy. I think there's certain types of things that, because times are good, maybe there's certain change people have been unwilling to make, and that you get the shock to the system. Maybe they're willing to try to more aggressively change the channels in which they do communications, the way in which they run processes, the level of customization that they're willing to accommodate, et cetera. And so I think in some ways it could accelerate parts of it as well.
Yeah, I don't think there's a clear cut there in terms of which direction the economics go in 2020. Certainly a little bit of optimism now, but that could change. And then what's the reaction to that? Go with that. And then the last one here is what's the trajectory of RPA? We've seen some very aggressive investments being made here. We've gone from, hey, we got our first unicorn last year, I think it was, and now we have multiple unicorns, and now unicorns now have 6 horns on them. And I don't know if that makes them a unicorn, but some of the valuations are absolutely fantastic. And that's on one dimension. Then there's the adoption by the enterprises, which is, hey, there seems to be more adoption, but there's also, we hear reports of people having a hard time scaling it. And then there's the AI dimension of it. I think that's all those things are still, the jury's still out, and we'll need to continue to look at that. I personally think this is part of our answer to the talent challenges, but there's a lot of different dimensions there. Okay, all right, so as we run out of time here, we kind of close this out here, we wanted to show you a couple of the different Pinnacle studies. You've seen bits and pieces from a couple, actually you saw 1 or 2 from studies that we just finished up in 2019. We've got some that are going to be available for 2020, and certainly would encourage anybody that's interested in understanding how their peers perform, and these are enterprise peers, so think about it as, hey, I want to understand how I rank compared to my others out there in the industry. And so if you look at the ones we did in 2018, 2019, those are available right now. I'll let you read those. But the ones that push toward in 2020 for the sourcing group, really looking at the sourcing and procurement organizational maturity. I think we're trying to bring together a holistic view of how that organization comes together. We're looking at winning supplier management later in the year. And then for the GICs, we've got a study that's, I think it's actually open right now. It is open right now. It's innovation in GICs. We're also going to look at talent skilling for shared services, and then also GICs creating value. It's something that we did do last year, and we want to enhance that study and see how things are progressing at the end of this year. So again, something to put on your to-do list if you're interested. And then finally, this is fresh data. I mean, literally, this is the first presentation of this, and as we go through here, if you're an enterprise and you'd like to have this shown to your boss or others in your organization, we'd certainly be happy to provide a complimentary briefing for your executive team, and or maybe we can customize it to specific interest that you're interested in. But let us know. And then obviously there's going to be a report from this. So I did mention that we did this for different stakeholder groups, and if you're interested in this is the kind of the enterprise view, but there will be stakeholder specific views that'll be available. If you're interested in one of those, let me know, or let Eric know, and we can make sure that happens for you.
Yeah, just to add on quickly, the webinar document will be available about a day from now, along with a link to the recording. So you will receive that. The published report will be some of the more stakeholder specific results for a particular group. So we've had a couple different questions that I want to go into. One was around, and actually if we can go back to slide 40, was around what did we mean by pineapple? And we actually did not say pineapple companies, we said Pinnacle companies. And this is on this slide, basically one of the forms of studies that we do is to understand how companies differentiate the business outcomes they get based off of what capabilities they have. And as Michael described here on slide 40, we look at that in a range of different areas. And the organizations that have a combination of both high capability and high outcome, we call Pinnacle, and we designate them with green. And so when you see our slides comparing companies to typical versus Pinnacle to try to untangle what the differences are, that's what that means. There was another question around what's our perspective on offshoring as a strategy, and is it likely to continue to be employed given the use of technologies such as AI, RPA, et cetera? Michael, I'll pose that to you, and then I'll offer some of my views as well.
Which one is that?
What's our view on the extent of offshoring? How will it be impacted by technologies?
AI, I think okay. So first of all, you think back about what we largely moved into the offshore locations. Initially, it was the repetitive, low-skill work, and we were looking for labor arbitrage, cost takeout. And I can remember some of my tours of data centers or service centers back when this was first getting started, where there was literally people were talking about, hey, we took the stuff off this screen, we moved it to this over here. And so for those, I think that automation really will have a big impact in those areas. So, but when we come back, we bring it back in terms of the onshore resources, I think the challenge won't be about labor takeout there, it'll be about labor productivity.
Yeah, in my view, just relative to is offshoring going to go away or be notably diminished? I think the answer is no. Is it evolving, and will it continue to evolve due to the technology? Yes. Part of that, due to some of these technologies truly replace people, but a lot of them also evolve what people are doing. Plus, a lot of organizations have enough work in a remote location that both the ability to move it back is challenging, the economics can still be challenging, but then also sometimes that critical mass of capability is actually some of the best positioned expertise to figure out, okay, how do we use technology to change the work? So maybe the team supporting it evolves, may shrink over time, et cetera, but may also be able to absorb other work that's more judgment oriented, et cetera.
Yeah, and I'd add to that is that the teams that, what got moved to India early or other low cost locations is those centers are radically different too. And so they are providing a lot more value. They're providing a lot more analytics, or a lot more insights into value to the overall dialogue. So their ability to contribute to the overall organization is exponentially better. So yes, their layer of routine, tasks that can be automated is certainly going to get evaluated, organization process by process, organization by organization. But I do think that those organizations now have they're there. They're not going to change now. We make it more difficult to do business with tariffs and taxes and other regulations, but I don't think they're going to change. Businesses are still going to be global.
Yep. The other part is most of the mature geographies are increasingly struggling to have enough labor, and so the remote geographies also help on that. So whereas there was what I call kind of unidirectional flow for a period of time where it was, hey, there's cost savings on a per head basis. Now things are moving in many directions, plus the work is changing. But I feel pretty confident that the value and probably even a fair bit of the employment numbers and some of the low cost I don't think they'll necessarily shrink. Some of them may slow. And we've seen a lot of organizations kind of capping their capacity and trying to optimize within it through a variety of mechanisms.
Yeah. And one thing I'd add to that, Eric, is the governments will try to put regulations in place, and they'll try to put protect potentially financial incentives, but the law of economics is far greater than the law of governments. And so if there's value to be created, businesses will find it.
Okay. All right. Another question here, Michael. One of the controversies you spoke about was RPA, and people are there's increasing reports of people struggling with scaling, and I know we're wrapping up a Pinnacle study on that. How do you see it? Has RPA hit its high point, and AI and other stuff is going to kind of take more of the limelight, or are people just not doing RPA quite right, and then they need to refocus, and there is a better way?
So I think we've actually done the RPA Pinnacle study 2 times now. Once just about 2 years ago, and now just recently finishing it up. And I would say there is a remarkable maturing of that population, or the RPA centers. And so we're not even worried about the things we were worried about 2 years ago. Those things are largely behind us. Yes, there are going to be some organizations that struggle with scaling, but I think for many organizations, they are finding the ways to do it. They've got the structure in place, they've got the talent in place, and they're integrating it into their Six Sigma programs. They're integrating it into their.
The ones that are getting to scale, are those the sort of things they're doing differently than those who aren't, or what?
I think they're all getting better. I think that some will do it faster than others, but I think they've all largely gotten past that initial hurdle of that. And so then the question is, the hardest thing will come into play here will be the business process redesign. How does the business interact with the technology, and does it take the time to think about this as a business process reengineering exercise, or is this an IT exercise?
Okay, great. Well, thank you. We've reached the end of the webinar for today. We thank you for your participation, and as mentioned, you'll receive an email here in the next day or so with links to both the recording of the video and the download of the webinar document itself. Thanks, and have a good rest of the day.
All right, thank you.